What's up guys, Americana back here with another video. Everybody is talking about the gold trade, how it's a signal of massive fear within the market, and signaling that when gold rises, all other asset classes are destined to fail. I want to push back against some of the key misconceptions I see around this topic, as well as talk about a potential top in gold and what that means for the market. So let's dive in. Alright guys, first things first, I do think a top in gold is very near. I posted a video, a short form video. As soon as we crossed this 4.236 extension, I said, hey guys, this is typically about the extent we see moves really in any asset class move into this 4.236 / 4.618 fib extension. I'm not going to show examples in this video. I kind of been doing this a lot this week. Source, trust me, bro. It just is what it is. You can even see reaction at each of these fib levels on the way up. This is a monthly chart, so it can be a little bit hard to see. Let's go ahead and drop down to the weekly. There you go. You guys kind of see what I'm talking about. And it has gone, even on the weekly time frame, we are essentially in a straight line up at this point. If you don't know, no matter the underlying greatness of an asset, cannot go in a straight line up forever. It just simply does not work this way. I don't care what the narrative is. I don't care what the reasoning is. I don't care about supply shortage. I don't care about anything. If I showed you a Bitcoin chart that looked just like this, people would be calling it a bubble, a Ponzi. Many names would be applied to that chart. So I just want to point it out. We are at the 4.618 extension. We can even drop down to the hourly here. I'm not saying this is the exact top or we won't take a few stabs. You can see so far we have had some reaction. I think the main thing I want to talk about in this video, there's a couple key elements I want to talk about. A lot of people have this conceptual notion that gold is a exact hedge against stock market and things like that. So if the stock market's going down, that means gold is going up. That's not true. We can point that out in this video. A lot of people think gold is an inflation hedge. If this rally has not proven true or false against that, I don't really know what to tell you. This entire rally, inflation has been nothing but down. Inflation's at like 1.5% right now. So that isn't true. That's really never been the case when you look over time. If anything, it's more currency debasement, similar to the Bitcoin trade. And then also too, people have this idea that gold is not speculative. Like people do not speculate on gold. This is not the case either. There's paper gold, there's gold futures, there's leverage gold, there's all types of products built around this tool. And there is massive speculation on it. I speculate that a majority of this leg up here has been a matter of speculation, which we will cover in another section of this video. Which you can take a little preview here, a little bit of evidence in there for that. But like any speculative rally, doesn't take much to kind of pop a small prick to pop a bubble. So that's kind of what I'm alluding to. Okay. If you guys did not know, gold dealers, silver dealers, silver's more down here, they're not even buying gold right now. They will not accept your physical gold. If they do, you have to pay, or you have to give them a steep discount. So gold or silver's at like 110 right now, 113. If you try to go offload your physical silver at a dealer, if they're even buying, you'll probably get about $60, $70 an ounce for something that's worth 110. And that's because they don't want it at these prices. They would rather not buy. They will straight up tell you, no, we're not buying, because they realize that this is kind of a speculative bubble at this point, built on fear, built on, a variety of things, in my opinion. There is some truth to the kind of currency debasement side of things, but when things get this high, you do have to realize that there's speculation involved. But I promise you that at these prices, these same gold dealers, silver dealers are selling lots of gold. All right. They're selling it, and they're selling it to retail buyers. This is not a chart I'm chasing. I bought silver in here, bought gold, same area, really. Bought some more gold here. That's just me holding for really, I'm young. Just gonna hold it forever essentially. But I'm definitely not buying up here, and I'm definitely never going to buy a chart that looks like this, no matter the asset. So now that we've got a few things out of the way, let's go ahead and move on to the meat and potatoes of this video. And I don't really know what to call this, but I just want to point something out. The trade in gold, you have to be early to the gold trade. Gold does prosper when there's fear in the market. Gold does well. Gold is going to go down less when there's fear in the market. All of these kind of typical things that you know about gold and why you would want to buy gold, they are true. But as we've seen time and time again, once we get into these speculative zones, speculation above all-time highs, gold loses that kind of correlation with the market. Gold is no longer really a hedge. Gold is no longer something that doesn't pull back or moves against the market and things like that. But I also want to point out how the market reacts typically when gold is in that speculative zone, and then how it reacts afterwards. Okay, so we have a few key things that you want to look at on this chart. First of all, we can start with these line graphs here. Dow Jones is going to be in blue, NASDAQ in green, Bitcoin in orange here. So the green vertical lines are going to mark kind of macro bottoms in gold's cycle. Obviously, you can see here we kind of kept making new lows, even if it took a while, trending down, trending, and then you can see kind of trend reverse, trending down, trend reverse. And this is the area that you want to be in the gold trade. Let me scoot this like that. Sorry about that. Like I mentioned, this is the area you want to be in the gold trade. And when I say in the gold trade, I'm not talking about to make millions of dollars or make a bunch of money as you would on the speculative side of things. But I'm talking about what gold is actually used for: a hedge against inflation, a hedge against uncertainty, market volatility, crashes, things like that. And you can see that in here. If you're early to the gold trade in 1976, what was the stock market doing? What was Dow Jones doing at that time? Going down while gold went up. Now, once you see gold poke above its all-time high, right? This is now a risk-on environment. We can say that gold goes first. We can speculate that if we're saying gold is breaking above its all-time highs. It's not so much true in this scenario here, but this is a really dramatic example. If you notice here, gold goes first. But this is only going to happen if there's extra liquidity in this market, despite what people say of, oh, there must have been super fearful times or something like that. Not particularly when the market had clearly already bottomed, right, from this kind of disconnect that it had in here where gold was acting as a hedge. Market had kind of bottomed and went on to, drastically outperform gold for many, many, many years to come after this. Even in here, while gold was in this speculative kind of rally, you could see early signs of risk on with things starting to trend up. And then once gold actually officially topped, the market really kicked off. This is from 1979 to 2001. I guess I can slide this line over a little bit. I think that's the true bottom in there. But this is August of 1999. You see gold find its macro bottom in here. Now again, if you were early to the gold trade, we can just put it either one of these, right? You guys, I'll just add another one because it did kind of trend down a little bit. But if you were early to this gold trade, if you were early to the gold trade in here, okay, this entire area, what did you miss out on in the market? What did you protect yourself against in the market? That's going to be the 2001 stock crash, right? Tech bubble. Okay, 2001, you were completely protected. Massive hedge against the market being in gold during that time. Again, you're early to the gold trade. You are early to the gold trade when you are under previous all-time highs. You're not in this speculative side of things. Now, again, in this same area, early to the gold trade, what did you protect yourself against? 2008, housing crisis. 2008, housing crisis. And that is being early to the gold trade, like I said. When it is not speculation, when it is purely strategic, when it is acting as it should, as a true hedge against inflation, against currency debasement, against geopolitical events, against all of these different things that you typically hear gold as a hedge against, it only works underneath the all-time highs. It only works if you're early to this trade. Now, when gold gets into speculation in here, what has already happened in the stock market? we've already bottomed. By that time, we have already bottomed. So this in here is similar to this in here. We've already bottomed. And then what happens when gold in that speculative bubble goes on for its top or finds its top right in here? Well, now assets, because like I said, it is already a risk on environment. If gold is able to crack above new all-time highs, there is speculation. It is risk on. It is not purely a hedge anymore. Asset prices surge. You can see Bitcoin was launched at the top of gold. Well, actually 2009, so never mind. I don't know why I don't have Bitcoin data going back that far. But anyways, hopefully you guys can see what I'm saying here. Yes, the things you hear about gold is true, or are true, right? It's a hedge, it's this, it's that. But you can speculate gold too, and people do speculate gold, and gold can have its own bubbles, all right? And gold can only have its own bubbles when the market is in a risk-on environment. Very clearly on here. If you're early to the gold trade, if you're somebody who's early, you're going to protect yourself against a lot of downside. We have an example here for downside. We have two examples from 2008 or 2001 to 2008. All right, and I think one thing people forget is like stock market really did not make new all-time highs anywhere in here. You see the NASDAQ as well. Like the NASDAQ did not make a new all-time high from 2001 until 2015. So even now, we've only been in like 11 years of risk on. Just want to point that out. And then what do we see here? We see the same exact thing show up. Gold's topped on its speculative bubble. We see massive risk on, which we saw the early phases in here of finding bottoms and things like that when gold was in its speculative phase. But now we have a kind of little crisscross as opposed to what we had in here, where gold was going up, where we saw turmoil in traditional markets. And then what do we find in, what is this, November of 2015? We find gold has another little macro bottom within its range. And I'm not saying things don't do well during this time. It's possible, especially with some of the tools we have now with quantitative easing and things like that. But I just want to point out some of the things we see during this time, right? So this entire hedge area, I guess we can call it, on gold, what do we see in the market, right? We have COVID 2020, COVID, see it on here. What else do we have in this hedge area? We had this bear market from 2021, and this was actually a recession. If you guys remember, recession, like a true recession in the stock market. We have this going on. Yes, gold does kind of move down with it, but it recovers a little bit quicker, things like that. Obviously, Bitcoin bear market. So we have COVID and COVID flash crash, I guess you call it, and a pretty nasty true bear market / recession out of the stock market, all while gold is in this hedging area underneath the all-time high. Where has gold been since then? Pure speculation. So gold got its breakout in October of 2023. If you look back as well, when altcoins broke out, that altcoin rally from October of 23 to March of 24 that everybody says was the top of the altcoin market kind of occurred as gold started breaking out. Again, why would we see gold breaking out as a hedge as at the same time Pepe and meme coin shitters are going crazy? That doesn't really make sense. And that is because it's a risk on environment. Like I said, when you start getting this speculation in gold, it is now a risk on environment. So everybody who is claiming, I'm happy for the gold bugs. I'm happy that they're getting these gains and stuff like that. For everybody who's claiming that this is happening because of geopolitical events, because everybody is scared and we need to act as a hedge, if that was the case, your gold dealers would be buying gold, which they're not. Only retail is buying gold. Let you go try to sell your gold right now, they're going to offer you 50% discount, or they're not going to accept it at all if they're even open to the fact of buying more metals. Very clearly, risk on environment, Bitcoin up, NASDAQ, Dow Jones up, typical stuff that you see, right? Finding, right, bottom in here once gold went speculative, right? Bottom in here, gold goes speculative. Bottom in here, gold goes speculative. Bottom in here, gold goes speculative. So there's different phases. And I don't want you guys to think that gold is immune to speculation or it's some perfect hedge against whatever. No, people will be degenerates. It just is what it is. And so what can we expect next? Honestly, I'm not saying, I know this is a Bitcoin heavy channel, so I'm not saying Bitcoin goes on some multi-year bull run or whatever. We don't really know what the future is going to look like or how long this is going to last. If we look back to the 1979 example, this lasted a very, very long time. If we look back to the 2011 example, right, not as long. So I think it's going to be, something that we have to determine as we go. But like we showed at the beginning of this video, if gold is going to find a top here, because again, let's not get it twisted, it's in a speculative bubble. If gold is going to find a top in here, I do believe that this will be good for risk on assets, as we already are in a risk on phase. Okay, that's kind of just my 2 cents. I don't think the fear mongering and stuff like that going on with gold is 100% honest. Gold breaking out does not mean World War III. It's never meant World War III. Gold bottoming is when you should probably start to worry. I mean, it's kind of basic when you think about it in a way. What am I trying to say? Rich people are extremely smart. They're early, they're decisive, and if gold is the true hedge against this stuff here, which we've seen time and time again, if gold is the true hedge for that, they're not going to be buying it from retail up here. Does that make sense? Like, am I making myself clear with that? If gold is the hedge and how they are going to protect their vast wealth, it's not going to happen from up here. It's kind of a sleight of hand trick. So let's say gold tops in here, finds a bottom. We'll just call it November of 2028. I'm not saying asset prices. I'm not saying Bitcoin rallies until November of 2028. I'm not saying that by any means. As you can see in here, even before gold's bottom, we had kind of chilled out in the market. Bitcoin definitely had chilled out. But what I am saying is people will get stuck in gold in here. Asset prices will go flying, and the smart rich people will take these asset prices that went up. They will rotate into gold in here while everybody is chasing these. Then when gold bottoms, just like we saw here, that's when we start getting choppier markets. That's when we start getting crises like COVID. That's maybe the market looks like 2001 through 2011 with 2 crashes, 2 massive crashes, while the rich protect their wealth. So that's how you guys have to think about this. I feel like when you break it down this way, hopefully you guys can see what I'm talking about here. And then also the added example of like rich people are they're smarter than this. So ignore the fear mongering right here. Take into account everything that I said with what actual gold dealers are doing, who's buying this gold, the fact that there is speculation around gold, what that speculation means for the market, that it already is a risk on environment. Gold is not going to rally above all-time highs in a market that is not risk on. And do not be fearful about gold breaking out, okay? Because when it tops, that has been good for asset prices. But definitely be fearful about gold finding a bottom, because that is when the rich people are taking their money they made in here, dumping it into gold, while you get chopped out for years and years, going through COVID flash crash and a 2 year and a half long recession. And then as soon as speculation arrives again, right, they can rotate their gold profits back into the market. Retail will go chase gold. They make all the money in assets. Maybe they dump their gold on retail. Again, the asset prices go up. They rinse, they repeat. They're back in the market, gold market at the bottom, to avoid the next chop phase in equities and assets. So hopefully that made sense to you guys. Hopefully you guys understand. If you guys have any questions, definitely let me know. But I don't think we need to be fearful about gold going much higher. I don't think we need to be fearful about the environment and the market regime and just overall environment about gold, or when gold does go in this speculative kind of bubble. And yeah, when gold does find a top, risk on should be pretty good. We already clearly are in a risk on environment if it is in this speculative bubble. But that, I'm kind of repeating myself and rambling a little bit, so we'll go ahead and wrap it up here. Hopefully that made sense. Let me know if you have questions. Free Discord in my bio. Make sure you check it out. Appreciate you guys as always. Peace.